One of the hot topics out there right now is all around remortgages and what they actually mean. If you're on social media, you will see mortgage brokers sharing lots of posts about when the right time to remortgage is. I see it every day. I follow a lot of mortgage brokers with my connections, and that's what they're all talking about. But it's really important to understand what a remortgage is and what it actually means for you. So a remortgage, this is essentially when you're looking to refinance the mortgage that you've already got. So this is taking the mortgage that you've currently got and moving it to another provider and renegotiating a new deal and new terms with that new lender. You can also do it with your existing lender. However, typically this is called a product transfer or a rate switch. But it essentially means paying off the mortgage that you've got and replacing it with another one. The purpose of it is to usually avoid going on to what's known as the lender's standard variable rate. Once you're on the standard variable rate, this is often higher than the interest rates that are available out there should you be looking to fix or go into a tracker rate, or even one of the other variable rates like a discounted rate. But typically speaking, you're looking to avoid going onto one of these rates. But you can also use a remortgage to release funds from your property to complete home improvements. If you're looking to invest, if you're looking to pay education or school fees, if you're looking to consolidate debts, all of these things are options that you can consider remortgaging for. Now, there are some financial benefits to it. So you could potentially secure a mortgage rate with another lender that's lower and better than what your existing lender is offering you at that time. It's important to check it out using a qualified broker who can check it for you, but that could be one of the financial benefits. You could also look to decrease the cost of your borrowing over the mortgage term. So when you're remortgaging, if you've currently got 20 years left, you can reduce that down to say maybe 15 years and make sure that the mortgage is getting paid off earlier. But as an existing homeowner, what you can do at this stage when it's time to remortgage is you can get access to the equity that you've built up in your property. And as I said just a minute ago, you can use this to complete home improvements, invest, pay off debts, these kind of things can be useful. Now, some things that you need to consider with it, there could be fees involved. So if you're looking to switch lender, you need to take into consideration, is there any legal fees involved with the process? Which there might well be. Is there potential penalties in coming out of your deal? If you're on social media, you'll see a lot of mortgage brokers, including myself, will be saying it's good to chat a year before, 6 months before. I always reach out to my existing clients a year before their mortgage is due for review, just to touch base with them and make them aware. But generally speaking, the majority of lenders anyway will allow you to do it 6 months in advance, which is when the key point for many brokers is going to be. You'll see them advertising that it's a good time to review it. The reason for that is if you're in a fixed rate, for example, and you're 1 year into a 5 year fixed rate, if you try and come out of that deal early, there will be penalties involved and the lenders are likely to charge you. So it's important to make sure that you're taking any of these penalties into consideration before remortgaging. You don't need to wait until there's a year left or 6 months left or 3 months left. You can remortgage at any time as long as you're aware of the risks and take all of the associated costs into consideration. Also, make sure that you're reviewing the terms and conditions, because the terms and conditions can be important when you're looking to switch as well. The process is very similar to when you're buying. You need to make sure that you can afford it. So as long as you can afford the repayments, you're passing the credit checks, it's likely that your mortgage is going to be approved subject to the valuation getting done and all the legal work. You can also make sure that your paperwork's in order, and you'll be asked for various different pieces of information that you may not have been asked when you're looking to buy. It can be a simplified process, so you could be asked for less, but if you're looking to pay off debts or complete home improvements, I would expect to be asked for more. So, for example, paying off debts, I would expect to be asked for settlement figures, credit card statements, things that are going to show that these debts are there and outstanding, what the balance is and what the settlements are going to be. If you're looking to complete home improvements, I would probably expect to provide evidence of building work quotes, evidence that you've got planning consents or architect's drawings if there's major work involved in these kind of things. So I would get it all prepared during the process. But I hope you found this useful. Just a brief summary of remortgages. And if you do have any questions on it, feel free to